Welcome to the March 21st, 2022 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, President, McGowan Group Asset Management, the team that cares, a team of 9 based right here in Dallas, serving affluent families all around the country. Thank you for tuning into YouTube. Be sure to subscribe. This was an extremely important week. We got a lot of data to cover. This is the Federal Reserve updated projections. It's a very important economic read that's built into the program, and it'll give you some explanations for what's going on right now, including the market response to the Federal Reserve raising interest rates. There are going to be a couple of counterintuitive things in here. Real change in GDP. Well, the Fed says growth is going to be 2.8% this year. That's down by about half. And you can see it declining to 2%. Unemployment rate stable at 3.5%. That's good news for those that want a job, because there's 11.3 million jobs out there. People getting pay raises. Inflation. 4.3% projected for this year. 7.9% was the consumer inflation. And producer inflation this week came in at 10% for the year. That is a profit squeeze, right? Consumer prices up 8 and costs up 10. And FedEx actually talked about the worker shortage, got to get pay raises. Well, the inflation declines to 2.3%. Federal Reserve just loves the 2% number for some reason. They always seem to go back to it. But Fed funds rate 1.9% by the end of the year. They raised 0.25%, and that projects that they're going to do that potentially 6 more times this year. What happened to the stock market? Key message in this broadcast: the Dow recovered to 34,400. The Ukrainian invasion low was near 32,000. That's a strong market, and I'm about to show you why. This is inflation. So, with the stronger economy, which is slowing, inflation went to 7.9%. You can see the rate on the 10-year Treasury was actually 0.5%. Now it's gone to about 2% as a benchmark. But if inflation's 8 and the 10-year Treasury is 2, right now, until inflation comes down, you're losing 6%. That's a negative real rate of interest. It's going backwards, and people don't generally like that. All right, real GDP by the quarter. 7% was last quarter. The current quarter, only 1.5%. What's that theme? It's called slowing growth. It's not a contraction according to these projections, and it slows down to about a 2% growth rate going forward. That's not impressive, but not a recession projected, at least by these numbers. This is an incredible number and explains part of the market's resilience and rally this week. Look at this. This is quarterly profit for the S&P 500, right, per S&P unit. Down here at 40, it had been there for about 2 years, with a big decline, of course, in 2020. Then 45, then 50. $50 per S&P unit. That's a 25% increase from the stable level before the pandemic. Then we go to $65 projected. That'd be a 30% increase in the profits of S&P companies. They handled the pandemic well, and there may be some disappointments in this with the cost squeeze that's going on, and we'll keep you updated. These may be too optimistic, but it also explains the value that people will pay for companies. This Dow Jones Industrial Average 1-year performance, 6.4%. That's after this bounce right here at the Ukrainian low. It was about, or Ukrainian invasion, it was flat for that 12-month period. The high was 37,000. But you can see this rally here, very impressive after the January sell-off, driven by the implosion of high multiple technology and the Ukrainian invasion, which sent a chill through the whole world in that tragedy. This is the Chinese market. Down, some of the Chinese companies are down by half this year. The overall China index that trades here, this is actually Hang Seng. So the Hang Seng, it's a Hong Kong index. It's actually down about 24%, but a lot of the Chinese companies down by half. What's going on in China? Slowing growth and politically driven confiscation, if you will, more tighter control on technology. Plus, they had a shutdown for a week over their COVID surge. Here is the victory over the past year. The pipeline index up 21% in 1 year. And what that tells you is that the oil and gas companies, the energy companies, traditional energy, coming back into favor with the realization that you can't go green instantaneously. This is West Texas Intermediate crude, went to 130, down back to 95 when escalation became less of a possibility. Then at the same time, a rally this week to $103 a barrel. So demand is strong, obviously, in the recovery that's taking place. Now, the dollar, when the Federal Reserve goes from 4 trillion to 8 or 9 trillion in electronically printed currency, twice as many dollars, you'd think it'd go half price. Not so fast. In this case, oil and the dollar appear related. Cheap oil, it was $10 a barrel back in 98, and look, the dollar index hit 120, okay? 140 here, but at that time, oil was oil was 140, dollar index 72. So there seems to be an inverse relationship, but it's not perfect. What's happened now? Well, the dollar index at 98 is about where it started in 1973, meaning the value of the dollar versus other currencies has held well. And inflation, of course, has taken the value down. But don't assume that the dollar's going to plummet just because they printed all that currency. And we'll keep you updated as we go forward. Remember, good inflation hedges evidenced this week by the strength in energy, evidenced by the strength in the medical dividend companies, which are up nicely year to date, despite the S&P and the Dow being negative. So we're getting some clues on what to do with inflation to have your assets grow by more than inflation. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. Be sure to join us on the Apple Podcast for the extended program with Alex Tolene as co-host. And of course, you can go to networthradio.com, fill out the preliminary client questionnaire to get the McGowan Group Wealth Management team on your side. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.